everyone, it's me, Buffy. Welcome to the latest episode of our weekly Market Insight series, coming directly from the Capital Markets Trading Desk at SunWest Mortgage Company. Let's get to it. Wall Street bounced back on Wednesday after suffering losses at the beginning of the week. The recovery was a result of chipmaker NVIDIA surpassing sale forecasts, providing momentum to the technology stocks. Treasury yields rose once again as last week's economic data, combined with the comments from the Federal Reserve officials and the details in the minutes from the central bank's last meeting, indicated that rate cuts may not be coming for a while. The minutes from the Federal Reserve's meeting last month were released this week. The record showed that policymakers were concerned with the risk of cutting rates too quickly. Fed officials agreed that interest rates had peaked, and they would closely monitor the data as they seek more evidence that inflation is on a downward path. Some officials showed concern that even though inflation had diminished, progress would stall if rates were cut too soon. In an interview recorded on Tuesday, Federal Reserve Bank of Richmond President Barkin indicated that even though the overall inflation picture has improved, recent economic data has shown that price pressures in some sectors remain too high. Barkin added that he is focusing more on short-term inflation figures than year-over-year data, while not providing any comments on the rate path. On Wednesday, Fed Governor Bowman indicated that the current economic environment does not warrant interest rate cuts from the central bank. Data released last week demonstrated that consumer and wholesale prices soared above expectations in January. The figures suggest that inflation is stickier than some investors expected and that the Federal Reserve will hold off on rate cuts. A few weeks ago, some investors were pricing March rate cuts. That possibly has now been eliminated, while May rate cuts now seem improbable. Optimistic traders are now hoping for June rate cuts. Mortgage demand took a hit last week after mortgage interest rates climbed to the highest level since early December. The average 30-year fixed mortgage rate soared to 7.06% from 6.87%. The rise in rates led to MBA mortgage applications crashing 10.6% for the week ending February 16th. Purchase applications were down 10% from the previous week and down 13% compared to last year. The refinance index plunged 11% from the week before, but edged out a 0.1% gain compared to the same week last year. Business activity in the U.S. slowed down a little during the month of February, even though the manufacturing pace reached its highest level in 17 months. The slower output came from a drop in the services sector. The S&P Global Flash U.S. Composite PMI, which gauges activity in both the manufacturing and services sectors, went down to 51.4 from 52 the previous month. Rising production and easing supply led manufacturing output to increase to 51.5 from 50.7 in January. Meanwhile, services PMI fell from 52.5 to 51.3. Even with high-profile layoffs, Labor Department data showed that initial applications for U.S. unemployment unexpectedly dipped to the lowest level in a month. Initial jobless claims decreased by 12,000 to 201,000 for the week ending February 17th. Economists had expected claims to rise to 218,000 for the period. Continuing claims fell to 1.86 million for the week ending February 10th. And the data shows with that, the labor market remains strong. Well, that's it for this week. If you like this video, please hit that like button and subscribe to show support to our channel. We appreciate you very much here at SunWest Mortgage Company. Stay updated with our news, and our trading desk will keep you informed with our pricing incentives. Have a great day and an even better weekend. Buffy, out.